Welcome to Commodities, and here we're looking at gold. Now, we can look at this in two ways. We can look at it as being corrective or impulsive. Now, it's impulsive, a structure from this point here moving up here, as long as this low here doesn't get taken out, okay? The 61.8 retracement level, if we look at this as being wave 1 up here, we're looking for an A and a B and a C wave, and the 50% retracement level and the 61.8 is around the 1290, 1295 sort of area. And the 61.8 is at 1290, so roughly. So it's all okay on the positive side, and we've got pretty much sort of equal swings above the 1300 here. So look, pretty much in a bit of a nutshell, if the 1290 holds as support, then we can look to see 1300 here. Now, even as a bearish pattern, we would see a retest of, in both cases, we should see a retest of 1300. So on the bullish side, we would need to see, if you're going to trade long, you need that 1300 as your support there, because otherwise you could get trapped in here on the short side, as this being the resistance here on the retest. Because this is a three-wave pattern so far, so it could be an A and a B and a C wave here, but like I mentioned, that would be confirmed taking that low out through here, or even, it'll probably get it a little bit earlier. But let's just drill in here for a moment, and this is what we have been tracking. So from this low here, we can look at this being the A wave, the B wave, or the C wave to this point here. Or we can see this as basically being up for one and back for two, then up for one and back for two into this little area through here. As I mentioned, we're looking for an A wave and a B wave, and the C wave moved down quite sharply based on the Fed's comments of the market still needing stimulus and more of it. So that sent that down quickly as a spike. So, but let's just see how that plays out here. I think I might have looked at here, just, right, yeah, I did break it down a little bit in here to have a bit of a look, and yeah, it may have pegged the low here now that it's back onto 1290, because I was counting this down as wave 1, wave 2, and then wave 3 to here, wave 4 to here, and then wave 5, extension in wave 5 down to here, because I had 1, 2, the third wave, the fourth wave, and then the fifth wave through to here in 5 waves as well, in terms of the 1, the 2, the 3, the 4, and the 5. So it was extending down on the fifth wave. So this was not sitting above the 1290 when I was looking at this, labeled this. So now it's above here. That's quite a good sign that we could be on the right track. The other point that we could be on the right track here of having the low in place is the market is deeply oversold on the daily, and we're looking for a bounce back on that, and it can come from here. Of course, you could go long from where we are here, 1290, 1293, so to speak, but you need to be careful, because we're in a pretty sharp trend to the downside, and any rallies here are in 3 waves, so like an A and a B and a C here, and this could be the same here, an A and a B and a C here, terminating here and finding the 1290 as resistance, and then moving lower through here if it was going to extend further, because the fact is that as this is moving down here, well, you can see the price action getting more intense, can't you? I mean, the bars are longer, and the patterns, the correctional patterns, are getting larger, and the trends are getting larger as well. So it does have that expansion in terms of a trend idea behind it. So picking the bottom is dangerous business. But like I mentioned, either way, long trades, to be safe, should have 1300 as their support there. Right, the silver market's in the same boat as well. Yesterday we were looking at this fourth wave here, and we're looking for a fifth wave up, and we're actually looking for a fifth wave that would be the same length as wave 1, up through to here, closer to the 2000. But the Fed's comments have not truncated this fifth wave, but have stopped it moving up. It has made a new high over the third wave there, so we can put that in place. In fact, that would probably have to go here. But either way, the 50-60% retracement levels down here. And look, it's probably possible you could count this as the A, the B, and the C here as well. But it just doesn't fit the whole structure that well coming up from this point here. From the second here, we can see 1, 2, 3, 4, and 5 here quite clearly as the third. So it's got to be the fourth and the fifth here. But anyway, let's see. We were never interested in this until we could confirm this wave 2 was in play. So we still wait for that. If the 1950 became the support here, in this case, you could go along from that point because that's where the supply is, well, the technical resistance, and the sellers would start, being from that point there. So a nice support on 1950 could do that. The copper market is in the same sort of vein as the precious metals. I've sort of relabeled this a little bit because we were looking for a 5-wave structure up here, but we've only got 3. We've got basically the A, the B, and the C wave, which is always in 5 waves except in a triangle. And I've labeled it like that because the move down through here, overlapping the top of wave 1 here, forces me to label it like that. But at the same time, I can see that we've got 5 waves down here, the B wave and the C wave coming into play here as well. So we've got a corrective pattern here, a corrective pattern here, which would leave us with a larger C wave to the upside here. And while the market's on top of 303, then it's supported by group 1, and that's important. If the 302 becomes the tested resistance, then you can bring in a bearish bias for that point there, and would see a move lower from that. But yeah, above the 303 is positive for the situation, and of course support on 305 would actually give it a bullish pattern because it's moved up through the low of wave A here, and that would make that an A and a B and a C, and then we'll know that top is going to be taken out through there. So look, with the metals, we've just got to sit back and wait and see what unfolds in the next session. The oil market is in the kind of the same boat really too, because from this low here, we're looking at a possible 3-wave corrective swing here in terms of the A wave, the B wave, and the C wave here, and that could be ending just here as such. So this is what we were looking for yesterday. So we'll be looking for a bit of a retest back into 100 here. Now look, on the bearish side, if this is an A and a B and a C, if the 100 becomes the retested resistance, short it. If the 101 becomes the support, go long. If the market comes down, which is probably expected to do, down to the 100 here and finds a nice support here, and then gets support back on the, say, 150 here, the 100.50, nice test of support, then go long from that with the view of adding on 101. So once again, we just need to allow this little pattern to confirm either way, and pick up the thread when it does confirm. So that's there. Once again, the market is deeply oversold on the daily, so the bias is to the upside, and because the market is above 100, the bias is to the upside as well. So you've got 2 things there that are strong, but you just need the wave count to help confirm that situation. The gas market, look, I'm not really sure about. I've just gone back to the 4-hour chart here, and the move up through here is, look, it's the red line's the old high over here. So you can see the market is being forced down. It's struggling here. It's not extending to the upside as such, but it still does have a bullish pattern to the upside. It's just not very sort of pleasing to look at as such, and therefore not giving a lot of confidence. So look, I don't really know what to say. All I can say is I can't really make heads or tails of this. It can be labelled in various ways. The only positive thing I do have is from this little move, this low here, coming up to the 480 there, that appears to be in 5 waves here. So as long as it stays above this trend line here, basically, then it's positive to the upside. So not really a lot of confidence there. So this is what we were looking at yesterday. We were looking for a 5-wave structure. We've got that. We're looking for a 50-60% retracement level. We've got that. It could be an A and a B and a C and get a bit more to it here. We'll see how it goes. But look, that's the only positive side I can actually sort of read as such. So we'll just leave the stock where it is and see how it pans out from that point there. Now the soybean market, I think we're going to be moving lower because we're under 1450. I've also sort of relabeled this top here as well. I've never sort of really been comfortable with it, and where I've relabeled it, not that it makes a lot of difference at this point, but I just think I should point it out, is that we had this as green wave 1 here, and now I've put it here from this point here. So wave 1, wave 2, and then 5 waves here, and the third wave here, the 1, 2, 3, 4, 5 for the strong third wave, fourth wave, the fifth wave here for the third, then the fourth, then the fifth here. This is 0.25 below this one here, but I don't think we should sort of worry about that too much. So look, I just look at, even in the bigger picture, it doesn't really make a lot of difference, because what we're looking for here is we're looking for this correction at the medium level to mature, and once it matures and starts to develop, we'll be able to pick up the thread to the downside. Now, it's still possible that this is the A wave, the B wave here, and the C wave here, and we'll get the bounce back up and we'll move up from here. And if that's the case, we'll examine what occurs here and what it looks like in here and pick it up from there. Once again, the market is deeply oversold on the daily at this point here, and it hasn't been like that for quite some time. So it can certainly, snap back from the 144, which is, double 72. It's where Gann and Fibonacci numbers meet. It's probably the only number that meet, but there's not a lot of difference in their numbers anyway. But it is, a squaring sort of situation. So that's, eyes are on that particular price point there. But look, let's just see how it develops. There's nothing there just yet as such. The wheat market, right. So just keeping it quite simple here is that from this low here, we're looking for 5 waves up there, which counts really nicely, actually, the 1, the 2, then wave 3 to here in 5 waves, 1, 2, 3, 4, 5, and the 4th wave and the 5th wave here in 5 waves to make wave 1, wave 2 back to here, and this appears to be in 5 waves here. So we were looking for a retracement level. Retracement, and it could pull back to the 717 and also to the 61.8, which is 717, and also come close to covering this little gap here. So that's still possible as well. A nice solid support on 730, which is top of group 1, 10, 20, 30, 1, 2, 3. Solid support on here sets the next target at the midpoint here, the 55, the second strongest number. The other reason for a bit of consolidation here is that the 741 here, the current high here is the 127.2 extension of wave 2. So from that point to that point, extending up here creates that there. It's just a Fibonacci extension, which it normally kicks in. It's probably not as valid as a 61.8, but it's probably in there with the 38.2 and the 23 and whatnot. So look, anyway, let's just see how this sort of develops here. And look, the aim, if we get support on 740, the aim is to add on to 740 and add on to 750, because from trading from 700 to 800, the idea is to build the trade, positions into the trade early, small bits at the numbers, and then once we get over the 50, yes, we can continue to add. But coming into 7, when you start getting the 8s, you start getting the even numbers, and you start getting profit taking from those numbers. So these are the numbers that we want to start reducing from taking profits into these numbers here, and definitely all of it at 800. So it's building here and then reducing. So we can add on the 750 and the 760 and the 772, but then we need to be sort of reducing into this last these last three digits here. So see how we go. The corn market as well. Now, it's not a very clean count coming up through here, okay? But we were looking at this being wave 1, wave 2, wave 3, and wave 4 coming back. Now, that's okay as long as it stays above the 510. And if it comes down and overlaps this one here at 508, at the top of wave 1, excuse me, the 508 here, if it gets breached here, then we've got overlapping wave structure. So I've brought the stop up to 506 from 503 to 506. Just to sort of tighten the game up a little bit. Because I am concerned about this structure down here. I mean, I've got all this here as the A wave, the B wave, and the C wave here, but this here also in reality is in 5 waves here. So this can be an A and a B and a C wave back to here, to the square root of 61.8, the 78.6. So it, at plus supply levels. So it can fail from this point here, and we need to be mindful of that. So we could have 5 waves down, an A and a B and a C wave here, and then moving down from this moving back down from here in a larger 5-wave pattern, which would be 1, 2, 3, 4, 5 down here. We'll have to catch it down here. So, unless this market moves up to the 520 here and gives us a nice cleaner 5-wave structure here, if it does that, then we know that we're going to be heading much higher, and then we can you can increase the bet size, so to speak, because we have confirmation on things. But look, as it stands, it's a little bit iffy, and that's the way that it is at the beginning of trends sometimes, and that's why it takes it can take 2 or 3 times to get into a large trend if you're trying to build in right from the bottom. So, and that's what we're trying to do here. Apart from that, everything else is intact. The US dollar is still moving to the downside, and we'll look at that shortly. Well, I'll look at that now, actually, while I mentioned, otherwise I'll forget about it. But I probably pointed out yesterday that the 79.50 had been breached, and it's a bearish pattern, it's a bearish trend coming down. This little move here is just a corrective rally coming off the 79 group 1 here, and we'll continue down here further because we've got 1, 2, 3, 4, and 5 here. And we're looking for this to move down, through the 79, down and through to the 78, and possibly a tad lower as well. So we've got plenty of space to the upside there. So let's just sort of see how we go here. Okay, the coffee market. Did I look at the corn? Yes, corn's done. Coffee, no change. Look, if we get support on 210, we'll go along. Otherwise, we're looking for a corrective move down here further. Doesn't really matter either way. Nothing here just yet, but a move up, even just moving up through this old high here. And that's possible because all of this move here is corrective. So it's like, to me, it's like a bit of a spring waiting, so it can move quite rapidly to the upside. So we'll see how you go with that. But, we don't have a proper setup for this just yet. The sugar market. Okay, so daily chart. As I mentioned, the market had broken out of the triangle pattern here, but I have seen this before with triangles, and I'm quite familiar with that sort of false breakout there. So we're still staying with it, and the triangle pattern, if it stands, triangles are normally in wave 4, and that's why I've got it labeled wave 4 here, or they can be in B waves as well, but so they're not really in wave 2s here, normally wave 4s. So they're 5 waves, which we label A, B, C, D, and E, and each one is 3 waves, and it's 3 waves on the internal structure here. So what we're looking for here in this down from the $18 here is we're looking for a zigzag in terms of 5 waves, 3 waves, and 5 waves. So when we drill into that a little bit closer through here, we can see that coming into E wave here, we've got this A wave, B wave, and the C wave here. And in the C wave here, we've got 1, 2, 3, 4, and 5 here for this leg. That's why I just wanted the 17 to play out here. So yesterday we were looking for a move a little bit lower and then a bounce, okay? Now we have got the bounce, but will it develop further, and do we have a low in here? We possibly can, but we just need that evidence, and this is the last little 5-wave structure that you can see quite clearly to the downside. So we may have the low pegged in here, but we would need confirmation. So far here we've got, it's a little bit tricky to read really, isn't it, in so much detail. But look, another high here would probably give us a little 5-wave structure to the upside here. The other point here is 1730, which is 1, 2, and 3, top of group 1. So support on top of group 1 will set the target at the midpoint. And I think that if we get support on 1730, you could go long, but it has to be tested support. Poking its head up through there is not support, you know. It's okay to buy the breakout in some cases, but not all cases. You know, the retest is more important. So that's what we're sort of looking for here. Let's just sort of see how it develops. Look, support on 1730, you can get a contract on that and look to add on 1750. But, you know, we're picking a low here, so it can be quite dangerous, but we could be on the money there too. The orange juice market. Okay, so well, we're looking for wave 4 and we're looking for support on 160. That's what we were looking for, and we may have that in play now. And what we were talking about yesterday and the day before and whatnot is that this move up here was a little bit sort of unreadable, but I came to the conclusion that if we just cut the head off it here and forgot about that spike there, then we'd have quite a nice 5-wave structure to here, and then we were looking for a correction back, and it was nice that it came below the 160. I was hoping it'd come a bit lower, but it's okay. And then it's what we're looking for is to develop tested support on the 160, which it has done. Not that you would have got it on 160 exactly, but you know, seeing it drift off into the 161, you know, you should, you know, if you're following this market, then you would be long on that, and also the 162. So the next step is to find support on top of group 1, 1, 2, 3. So support on here, we can see that we've got 1, 2. So this is all the 3rd wave up here. So there'll be a 4th and a 5th. So when we're looking for support on 163, it could take a little while to do that. And it could also have swings between 164 and 162, and with 163 being the balance line in here. Look a little bit like the 160 here, where it basically, you know, it's a bit of a triangle pattern really, isn't it? It's kind of diminishing into that particular number, working with that. And that's kind of what you're looking for at the 163. The 3 is important as a group 1 when you're trading to the upside, because what it does, it sets the target to the 165, which is up at the group 2 area here. And yes, like I mentioned, it could spike up to that point, but doesn't really matter. After the vibration like here, done on here, then support here, it confirms that you're in the bull market, because the idea of, you know, group 1 here and group 2 here, they basically hold the market to the closest largest number, which is the 160. But when you get support on 163, what happens on psychologically terms is, and I'm talking about volume here and how people think and where they place their orders, they start moving them from this 160 area through here slowly. They release and they all start to sort of accumulate it at the next number, which is the 5 here, and the more orders here will just suck it straight up. The market moves quite quickly between 5 and 3 in both directions, and also 5 and 8. It moves slowly between 1, 2, and 3, but moves quickly between 3, 5, and 8, being up or down. Good numbers to trade. Right, okay, that's enough yakking. Cheers.